Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, May 29th, 2013. We had an up session, but I think the up session really kind of camouflaged the real weakness that was found throughout the market today. We had a holiday week. We gapped up very, very sharply following the day off for the trading markets, and really after the first initial push to the upside, the markets really just kind of continued to fill in to the downside. A couple of features: the S&P filled the gap on the day and only closed up 4 handles on the day. The rest of the averages were not so terrific. The Dow, the broad market real index, was really one of the better performing indexes. Nasdaq Composite was up fairly decently, but the internals were not that great. The VIX closed up on the day by 50 cents, even though the averages were all higher on the day, which is definitely a divergence and noteworthy. So let's move on and take a look at the major futures and see what they have to tell us. All right, so here's a look at the ES futures. We gapped up sharply on the day, as you can see. We attempted to push a little bit higher, but as you note here from the Gann box, we're already into overbought territory. What we essentially did was just roll down and basically fill the gap on the day and close near the lows of the day. So you can see that these higher prices here on the chart so far have really been rejected and not been embraced by the buyers. Key support is just below, which is going to be Friday's settlement, which is coincident with the 10 EMA at about 1649. Overhead resistance remains up in this area, which was the open of the last couple of sessions where we're up at this level. This is 1668. Note the tails all up here at the top of the chart. So this area is not very well controlled by the bulls. If we do continue higher, key resistance is going to be the plus 2/8 level, which was tested last week. That's 1687.50. Key support is going to be in the 8/8 area. That's 1625. Here's a look at the NQ futures. Pretty much the same design on the chart as the ES futures. Just want to point out here a couple things on the Seeker chart. On the Seeker study, we're now 11 days up in the countdown for exhaustion, so we're potentially just 2 days away from an exhaustion reading here in the Nasdaq futures. Key resistance remains at the plus 2/8 level, 30.47. Support is the close from these two candles previously last week, and also the 10 EMA. And again, if that support yields, the next real support is going to be coming in at 8/8 level at 29.69, which is going to be very, very important and very, very strong support when it first trades. The other thing to keep in mind, and talk about this with the S&P chart, but with the Nasdaq chart, it has the same condition here. We're up the previous day. Today we're up, but closed below the open. This is a camouflage sell signal. It's roughly at a double top here compared to this previous probing up in here. So we've really got to be on guard for that. We saw a lot of camouflage sell signals across the board, a lot of the different indices and stocks. So this is definitely something you want to be aware of going into tomorrow's session. Now, as far as risk on and risk off goes, if we look at the S&P divided by the TLT for our key cross here, I just want to point your attention here to where we started to pivot higher. That was essentially mid-November in 2012. We were riding this channel up here, started to get a little bit extended and tired, broke to the downside here, lost the channel, but ultimately recovered it. We've been using the lower fringe of this channel recently, but we had a very, very soft day, a very, very weak day in the TLT. So the bond prices were going down, the rates were going up. We got a very, very sharp spike here in the TLT cross. What I wanted to point out here is just if you look at the pivot from the most recent inflection point here, which is basically at the very beginning of May. What we've really done here is really had a very, very aggressive move to the upside here in the ratio with investors just really rushing to put risk on and not miss it. And this is much more aggressive than all of the other upside impulses that we've seen throughout the year, and also since the real pivot here at the very end of this fourth quarter in 2012. So we're starting to get extended here as far as risk on goes, and definitely something to figure into the mix going forward. So if we see some of the other internals flash warning signs, keep in mind that this is going to add a lot of credence to that. Here's a look at the weekly Dow Gold ratio. This is essentially just stalled here now. We have this descending triangle that we were able to break above, use for support, and pivot up through. So when this ratio is on the rise, that really puts stocks in favor over gold. But if we toggle down to the daily time frame, you're going to see that that this chart has really stalled now after a very, very aggressive run up. This daily time frame that we're looking at now really shows you the veracity of this move, and right now we're really starting to have trouble here with this most recent high in this ratio. So I think what that points us to is maybe a little bit of a pause here in the equities at some point, and certainly keep an eye on the gold mining shares, the gold miners or gold itself, just to see if there's going to be some kind of a recovery in that, and some kind of retracement here of this very, very aggressive move to the upside here in the gold shares. Internally, the 10-day trend is just hovering kind of above that climactically overbought area. We haven't really hit it yet. We are very, very close, about a little bit more than a week ago, but we weren't really able to penetrate that 0.85 level that really gets the market at least short term overbought. So we're just really kind of waiting to see if we can get to that level. If we do get to that level, that is going to be one of those key internal metrics that will pivot the market back to the downside here, at least in the intermediate term. One of the other internals that we want to watch is the total put call ratio. The total put call ratio didn't really smack that 0.5 threshold. Got very, very close to it a couple of times here, but didn't get there. So if we see that 10-day trend get to 0.85 or lower, and then hopefully see this reversal threshold breached at 0.5 on the total put call ratio, that's going to really put our mind in thinking towards a reversal to the downside. But as of now, we don't have it yet, so there's still some gas left in the tank for upside play in the markets. All right, and finally, here's a look at the cumulative advanced decline lines. These are really, really important, and the one thing that the market will not argue with. If these give way in yield, the market's in trouble. When we had that price shock to the downside late last week, I talked about this in the trading lab. The fact that the cumulative advanced decline line on the New York Stock Exchange side, the top line here, had not buckled and had not broken trend yet. So this trend is still in effect. And until this trend breaks, traders can still be looking to buy pullbacks until that happens. Now, as far as the individual sectors go today, the XAU was kind of slugging along. It had a little bit of a pop in the middle of the day, but is really trying to set up this double bottom. Right now, it's still intact. It does not have a higher high in place. We're going to have to get above where my cursor is right now, above 367, 368 area, to qualify this as a higher low or a double bottom. We've got to pivot to the upside here. Hasn't happened yet, but definitely want to be on guard for that. The SOX, the BTK, and the BKX, to different degrees, were all higher on the day. The one thing you can see is that the BKX, which is the green line here, did make a new high in this move, while the others did not. Now, as far as the individual sectors themselves, here's a look at the BKX, which was a very good performer on the day. Did make a new high close on the move. If you can see where my cursor is, we made a new high close on the move. Not a new absolute high, at least intraday. Key resistance remains at 8As at 62.50, and there's going to be key support here at Friday's gap, Friday's close, just below 60.90 or so, and then the 10 EMA is there, which is defining our short-term trend. The other important charts to watch are going to be the SOX. SOX was higher on the day, touched that 8 level at 468.75, but couldn't get through. The chart now is 8 days up in the seeker count. XAU is still kind of just slugging along this 100 area, using this 0 ace level as key support here. This Murray Math level at 0 ace is really really strong support. We're up fairly deep into the count now. We're 8 bars down now on this new seeker count, but we don't have an extension to the downside. So if we do print that 13, you want to see that with a little bit more extension to have some better confidence in that. The oil services were also fairly decent today. They're up a little less than 1%, but again, unable to take out that 8 ace level at 265.5. 10 days up now on the seeker count. The oil futures today were pretty strong. We're still kind of trapped in this wide trading range that we've been in between the 6 ace level and the 50 DMA. So right now there's really no trend. We're just kind of lateral here. The real important thing is going to be if the bulls can pivot this and get a settlement above the active static trend line from this 9-bar drop. This green line right here is going to be really the one to watch. Haven't been able to do that yet, but that's going to be very, very important if they can do that to the upside. Here's a look at gold. We basically retested this prior low here in gold. Gold's still kind of hovering in this congestion pattern here. Has not been able to close yet above the 10 EMA, which defines the short-term trend. So for gold, the short-term trend is still lower and still down, but pullbacks can be looked at as buying opportunities until that prior low is taken out. If the 10 EMA is exceeded on a closing basis and then follows through, then we're going to be getting a little bit more aggressive on the long side and looking for momentum to develop and looking for reversal breakouts and continuations to the upside in gold and also, of course, the gold mining stocks. Well, that's going to be it for this evening. As always, thanks for listening. This has been Rich for Tradesight.